Is the goal for you to pull all of your money out and spend it on lifestyle, buy the nice cars and buy the nice watches and go to the fanciest restaurants? Because if it is, you're going to pay a lot of tax because you've got to pull it out. That creates taxation point. And even if you're in a limited company structure or a group structure, which we'll get into in a second, you still got to then pay personal tax on your dividends, which is a distribution of your profits.
Yep.
So if you're an entrepreneur that just wants to spend and enjoy that lifestyle, you're going to find it tough. I'll be completely honest with you. If you're an entrepreneur that wants to have a certain level of lifestyle and then wants to focus on reinvestment and compounding wealth and building for the future, then you've got a lot more options. But firstly, you've got to look at structure, which is sole trader, which is just you as the business acting as an individual that's self-employed. You can set up with HMRC under what's called self-assessment, which is essentially the system of whereby you get taxed. Then there's limited company, which has protection. So it's a separate entity to yourself. It separates you from the business. The limited company has its own bank account, it has shareholders, and you then have trade that goes through that company. So it separates. So rather than paying income tax at 20%, 40%, 45%, plus national insurance, you have corporation tax, which is anywhere from 19 to 25%, which is based on the level of profits that you have. So it simplifies the tax system and it allows you to defer some of the tax that you would pay as a sole trader by housing it in the separate entity, which is the limited company.